Yeah, I know exactly.
Now you want to.
I don't know if we have real life.
Susie, we're good. We're good? Okay, so we're gonna call the IBA meeting to order. Roll call, please, Julia.
Ms. Laughlin?
Here.
Ms. Laughlin's present, Ms. Lara?
Here.
Ms. Lara's present, Mr. Siegel?
Here.
Mr. Siegel's present, Mr. Smith?
Here.
Mr. Smith is present, Mr. Steingart?
Here.
Mr. Steingart is present, Ms. Roy, Mr. Gunther, Mr. Llewellyn, and Mr. Brooks are absent.
Okay. First order of business is to approve the minutes of February 12. So I had a chance to look at that, got the motion. Who made that, Ira?
Yes.
Scott second, all in favor?
Aye.
Any opposed? Okay. Bills and communication. Has anything changed since what's in our package then?
Yes, there's a revised schedule of payments on everyone's, by everyone's chair, and there's no change to the number of payments and amount of payments that are for your approval today. So what you see is 9 payments in the amount of $27,839.17. There is a change on the bottom. We added some additional payroll expenses related to health insurance reimbursement. So those are shaded down at the bottom, but those are just not for your approval today. Those are just routine payments.
Okay. Does anybody have any, let's get a motion first, have a motion to approve the bills and payments. Second, Scott, any discussion? Okay, all in favor?
Aye.
Any opposed? Okay, that carries. The next item, staff report. Anything, Jen, you wanna?
No changes or updates.
Anybody have any questions about the staff report? No? Okay, we'll move on to new business. The first resolution is to approve the quarterly payment to the Partnership for Economic Development. Oh, sorry, wrong. To approve the agreement, right? We have a new agreement.
It's right, it's both. So we've traditionally done 3-year agreements with the partnership, and the last one ended at the end of 2023. The county this time has moved to a 4-year agreement, so we modeled that same term of agreement. So the resolution before you is to approve this new agreement, which was included in your agenda packet, and also to approve the first payment for the first quarter of 2024, which is the amount of $25,000.
I'll make that one. Second.
Okay, any discussion, questions? Okay, all in favor?
Aye.
Any opposed? Okay, carried. Now the next resolution is related to Adelor. They're a pilot. We have to authorize the acceptance of a guarantee for EPR, the financial security for the pilot, right?
Right, and this is something we do every year. The Adelar Developer LLC always asks us to accept a guarantee of EPR Properties, Adelar's parent company, to secure the pilot payment. So Howard and Paul have reviewed EPR's financials for 2023, and as in years past, have recommended that we accept that guarantee from EPR again this year. Would add anything, Howard?
As I had disclosed that have done business in the past, with Parkwright, it really goes to a management company, not to EPR. And since I sold the building, and no financial gain to me at this point anyhow, but I just want to disclose.
Probably the last time you have to do that,
Yes.
because you're no longer contractually doing anything with them. So. Okay, anybody have any questions for Howard?
I think it's obviously we like the project, so I think the response will say people, we haven't had to go through 20 different, like the 4 other projects they've managed. And the people that we started with, the attorneys now became chief counsel for all corporate sections, so we have kind of,
Good, okay, so did I already call the question? No, all in favor? Aye. Any opposed?
Did we?
I
I don't think
thought
we had a second yet.
we had a motion.
I'll make the motion.
Okay, Kathleen, can I have a second?
Yeah.
Scott, second, all in favor, say aye. Any opposed? Okay, carries. The next item for discussion and approval, we have 3 policies to approve: the procurement policy, the investment policy, and the disposition of real property guidelines. Jen, do we need to talk about
Oh, if you would like to, we can. There's no changes to these policies since last year. We usually approve them in a block, so if you're comfortable doing that.
Everybody comfortable doing it in a block?
Yes.
Okay, can I have a motion to approve the three policies? Scott, second by Howard, all in favor, say aye.
Aye.
Any opposed? Okay, that's done. Same with the mission statement and the performance measurements. Does that require a motion?
Yes,
Okay.
yes.
So did everybody get a chance to just refresh their memory about what our mission is? I have to say, I find it helpful to look at because, it wasn't until we were working on some of the housing stuff last year where you really came to understand that you're also responsible, not just for new things, but keeping stability of our economic, landscape in our county. So, that was something you don't always think about until you read.
So you want to do the project?
Yeah, until you want the river project, right? So, okay, so can I have a motion to approve our mission statement and performance metrics? Second, Kathleen, any discussion, questions, concerns? Okay, all in favor, say aye.
Aye.
Opposed? Okay, that carries. In your packet was the board member self-evaluation. I don't know that we need to, it was pretty unanimous as to people's sentiment about everything that was on the questionnaire. Is there anything, Jen, that you feel we need to keep talking about or?
No, we received 7 out of 8 responses. Ira doesn't fill one out because he wasn't on the board last year. Well, you saw it in all instances except for one. There was one board member who somewhat agreed with the statement that the board knows the statutory obligations and the agency is in compliance with state law. Otherwise, all board members who responded agreed with all the statements relating to what the board, how the board performs and what the level of knowledge of the board of its duties is. So I don't have anything to add, and there's no motion or approval on it. It's just, we need to do this assessment every year. And also, as you noticed, the responses are identical for the funding corp and the LDC. So
I guess we'll have to move each one in each meeting, or we can't just.
I just need to report that the board conducted its self-evaluation, so you don't have to do anything. We did it, we acknowledged that you did it.
And just to be clear, it was really unanimous by way of everyone agreeing with everything on it. There was one person at one of the points that just felt they somewhat agreed, but the choices were agree, somewhat disagree. So there was a somewhat agree.
Yeah, because I think we asked our attorney on it.
Yeah, exactly.
So we're factual,
Yeah.
we can at least remember that we know and make a decision without sometimes getting legal advice. So that way on the record, that would be the thought process to have legal counsel that would require clarification. That's a somewhat agree.
Yeah, right. Okay, so, how are we gonna do how are we doing the audit?
So if you're comfortable, Andrew's here to talk about all 3 audit reports. We have to have each agency meet today. IDA also, I would like to ask for an executive session, so we can do that at your convenience. If it's acceptable to everyone, Andrew can talk about all 3 audits in this meeting. There's no reason really not to. Separately, the Paris, so what you're being asked in each meeting is to accept the financial information that's included in the Paris annual report. The financial information is the information that's in various audits, and that you're accepting the other 3 Paris reports that we're submitting, which are the investment report, procurement report, and certified financial audit. So for
And be approved in each meeting, right?
yes, yeah.
But Andrew can present all now, so maybe we should do that and then do the executive session after that. That would keep Andrew waiting. Does that work for everybody? Okay. So let's do that. So Andrew, it's all yours.
Great. So I assume you all have it in your package. I'll just
And it's also here.
try to be brief. I know you have a short meeting here. So starting with the IDA, the net position of the IDA increased 43,000 for the year. That's a decrease of about 574 last year. The net position increased 617,000. The differences are a few things. In your project fee revenues were down 400,000, 420,000. And last year mainly was one large mortgage fee, got a $375,000 mortgage fee, which was most of the project fees last year. Also, your promotion expenses were up 43,000. That was due to the increase in the partnership funding. You had that one-time decrease last year, back up to what it normally is. And your consulting expenses were also up, mainly due to you taking over the HVAC DC payments. So your share of that for 6 months is $15,000. And then salaries and benefits were up 75,000. So those are the four components change from year to year. And this just sort of shows the operating activity, a 5-year trend, and you can see that in the last year where your revenues came down, your expenses went up a little bit, sort of closes the gap in the increase in net position. And sort of the same result with your net position, you saw it was increasing, and then the last year it sort of flattened out a little bit, didn't have the big increase that we normally had. Sort of self-explanatory in the first page. And just real briefly, last year I talked about GASB 87 because there's so many leases. It's really it's sort of a convoluted statement, GASB 87. Just want to point out a couple of things. Most people are normally used to when you have a lease, it's just lease income when you get the leases or leases when you pay them. The GASB 87, they have all this new accounting. But if you're looking at your financial statements, the idea you'll see you have an operating lease receivable on the balance sheet, a current and a non-current portion, and that's the portion that's owed on those leases. But also there's what we call a deferred inflow of resources for leases, which is a liability account. So those two will always sort of net each other out. So basically, GASB 87 is not changing the net position of the agents. It's sort of, as you pay down the leases, you also amortize the deferred inflows. They'll come down at the same rate. So it's not changing anything. It's just the way they watch it. So
Trying to fix.
we haven't got to conversation. I don't know what they're trying to fix. It's,
I mean, it's, why why was that needed that
and when you have a lease payable, you have to now record an asset or the right to use asset, and you have to amortize that over time, even though it's not really your asset. It's just, I don't know, it's why they want to come up with new standards to show that
they're not sleeping?
right. And then on your income statement, you'll see there's a couple of things you'll see on the income statement. You have interest income from leases of about 27,000. Now, a portion of that is your capital leases. Those are still reported the same way they always are reported, capital. You sell the equipment. That left 19,000 as the interest you earn on your operating leases, your lease income on the profit and loss is 118,980. And that totals 138, and that's the exact amount of the actual lease payments you receive. So previous years, you would just show lease income of $138,000. Now we have to allocate them. That's the only difference. It adds all these different accounts, but just to be clear, it doesn't really change the effect, the yearly activity or the net position. A couple of things we test the pilot disbursements during the course of the audit. We make sure your agency fee and pilot are correct for the original agreement. We make sure the calculation is correct, it's dispersed to the proper municipalities. And we also look at your FTE certifications, making sure that they filed them, and if they didn't meet the FTE, we make sure there's a proper FTE charge. We also test your other disbursements for proper approvals, supporting documentation, tangible checks, posting into the general ledger. So we look at every step of the disbursement process to make sure you have control over those and they're being posted accurately. The revenue, we test a significant portion of your revenues through like substantive testing. So we look at original agreements. So you have a lot of agency fees that come in. We have a schedule of all the agency fees you have for all your different agreements, and we reconcile that to what you're collecting during the course of the year. And then we also look at supporting documentation for your other future projects, more than that revenue. We'll take a sampling and we'll look for the support of where that money is. No significant findings as a result of our testing, no written comments in the report. A couple of minor issues we always will discuss at the end of the report with Jen and Julio, maybe classification items, how to post things, things like that. They're both very good at addressing any need. Discuss up with them next year. The issue is not there. And you get unmodified opinion on the financial statement, which means everything is in accordance with generally accepted. So
I think it's appropriate to commend our staff for having an audit report like this. As a board member, there's nothing worse than ever being presented with problems that our auditors pick up. So I want to thank Julio, Bethany, Jen, really for doing a good job of all of this.
Thanks for keeping us out of jail.
Yeah.
And the great thing is, any questions we have, they have a spreadsheet for everything. And as auditors, all we can answer for is where this number come from, copy up a spreadsheet, we look at how you got to it, test it and see if it makes sense. That's it. So they have backup for everything.
Wonderful. Okay, so now you're gonna move on to do the same thing for which you.
Okay, go ahead, go funding first.
Sure.
Okay, funding, again, subject to government auditing standards, it's a component unit of the county. So we must test and report on internal controls and compliance. In the audit report, you'll see the final 2 pages, that's our report on controls and compliance. No significant deficiencies or material weaknesses noted there either. Testing the controls, same thing, disbursements, proper approvals, supporting documentation, activity posted properly in the bank statements, 2 signatures on the checks. So we look at all what your procedures are, we look to make sure you follow those. That's really what we're doing, we're understanding your internal controls, and then we're testing your controls, making sure they're good, and then if they're good, are you doing it? That's what we're testing. Bank reconciliation, second person review and sign off, someone does the bank rec, someone else signs off on it. Adjusting journal entries, we test them also, we trace to make sure there's supporting documentation for any adjustments made into the accounting record. We had a $243,000 decrease in net position this year. It was mainly due to the $200,000 payment to the Capstone Regional. That was because you sort of had 2 payments this year. You get the first one and the first annual. If you look at year to year, even though you had a $243,000 decrease, actually it was 130 better than last year. But last year you had those transactions regarding the land that was transferred back to the county. So that sort of resulted in a $313,000 decrease in your net position. You had gotten the land the year before, you sold, you sent it back to them. Some of the other differences was, as I mentioned, the $200,000, $10,000 reduction in the management fees you're paying to the IDA, and the $12,500 reduction in payments to the HVAC, because as I mentioned, the IDA got the exposure. There was $53,000 repaid on outstanding loans, no new loans were issued during the year. And you also get an unmodified opinion on the financial statements, clean report, the gap. Same thing, we go over issues verbally with Jen and Julio, usually it's just how to post things. Your internal controls, for the most part, are operating effectively. Ready for infrastructure?
Ready for infrastructure?
Same thing, subject to government auditing standards. The report is in the back of it. You'll see the 2 pages in the back with the internal controls and compliance. All the various things we test here, same thing, we're testing the controls over the activity. So we're not just testing to make sure the balance is correct. We're making sure that your controls, again, are operating as they're supposed to. Everything has approvals that they're supposed to have. Your cash receipts for the infrastructure, we pretty much test substantively. You have the special assessment and the investment. Those are your 2 revenue sources. So we can test your investment income right off the statements, how much income you earned on them, and the special assessment is obviously checking that. Those are substantively tested. You had a $1.27 million decrease in net position, and this is mainly due to the difference between bond principal and depreciation expenses on capital assets. Now, I'm not sure if you had gotten my original infrastructure. I was reviewing this morning, and I realized, wait a second, what I originally said about the decrease didn't quite make sense, and I researched it, and I wanted to sort of put it in a better way. The difference between your bond principal and your depreciation expense is really what's going to make up for your net income or loss on the infrastructure going forward from this point. And that's because your bond principal payments are funded with the special assessment, but they're not an expense, because you just bond principal, you're reducing a liability. So your net position will increase every year by the amount of your bond principal. But then it will decrease by the amount of your depreciation. So right now, since your bond principal is lower than your depreciation, you're always going to show that. Slowly that'll shrink, and you can see it from last year to this year, it shrunk a little bit. And eventually you'll have a year to break even, and then you'll start showing an increase in that position until everything fully depreciates, the bonds are paid off, and you're at zero. That's pretty much the trend will be. So you'll still be showing the losses for quite a bit in that position. We'll keep going down. At some point, when it switches over, when the principal portion of the bond exceeds 3.3 million, then at that point, it'll start going up and it's back to increase. Overall, same thing, you get an unmodified opinion, clean report, everything is in accordance with everybody except for capital.
So Jen, now, do we move it or we don't?
So what I have to tell the state is that the board has reviewed and accepted the financial information in the annual report and has reviewed and accepted the parents' certified financial audit, which is just audit, the procurement report and the investment report. Yes, so that would be the,
The IDA,
yes, just for IDA right now.
right?
So is that a motion altogether, or?
It can be one, yeah. I'll make that motion.
Okay. And Jane, you'll write, whatever you said that, get your words were. Because I'm not gonna be able to
No,
do that.
Well, it just goes by.
Yes.
Okay, so Kathleen made the motion, Ira second, any further discussion, questions? Okay, all in favor, say aye.
Aye.
Any opposed? Okay, great. Now we need executive session?
Yes.
For what purpose?
To discuss
Would it
the,
make sense for us to just keep this open, go through the others and then close them, and then there won't be any further business?
there will
That
be,
way- Because don't you have to go on and off with the?
Yeah. Well, we have to go up either way, we have to redo it for the next meeting anyway.
Oh, okay.
So otherwise we do it 4 times instead of 3 times, to come back into the IDA. So since we don't have public here anyway today,
I'm only here with the funding cost that out.
oh, you're here for the funding court meeting?
The county attorney's office is looking into the issue with knowledge that I think you're all aware of. So I was asked if I was real to attend, if that becomes a discussion.
Okay,
Tom, do you want me to text you when we do that?
That's fine, you know where my office.
I do.
It ain't far.
No.
okay, so we'll come get you.
Okay.
Thank you.
Yeah,
Thanks, Andrew.
you have my cell, right?
Yep.
Just text me.
I will.
Do you want me to close this
Yes,
door?
please.
So this is an executive session to discuss the financial history of actually 3 particular corporations.
Okay, motion to go in, Scott, Kathleen, second, all in favor, aye. Okay, so Bacon, you'll turn off, everything.